Okay, we're back. Just kind of doodling around. Let's take a look officially at what's going on. Yin worked out nicely. This is why we did not crowd it. Now our stop can safely go. Uh, Break even should be fine. I think if we get back down here, we're in trouble. That would, we already got 80 pips, and this thing's go to break even. We've taken these guys out. More than likely, we've got some protection from anybody that really wants in this thing now is going to help us out at the 382 or 618 at least. So break even ought to be pretty safe. If you want to just make sure you could hang it under this last poke, and then you'd only lose 10 pips. I think break even's fine. I mean, I'd be surprised if we touch this line again. So our target is way up here. Got another 200 pips to go. Pretty happy about that. We will work our stop up as we get some structure. What's that mean? Well, as this thing makes swing highs and swing lows, if it does, we may not get much, considering the way it's gone up in this kind of rangy pattern in the past. There hasn't been a whole lot of area to hide your stop under, so we may have to do something like, for example, once we get up into here, we'd have our stop in here, and then once we saw this big spike up, we'd tighten up, hoping that the spike took us out of the trade, and if not, then when it came back down, that would take us out of the trade with profit from here to here. Same kind of thing over here. Right now there's nothing to build a stop over, or to put a stop under. What we can do is when we see some stair-stepping type action, we'll tighten things up a bit. It'll probably look something like that. I'm expecting this to be fairly vertical because it's been rangy, making slightly new higher highs and higher lows each time we test either side of this upsloping range, which we have marked out here in red. So that's what we'll do. We'll follow this thing up, giving it room to breathe, while at the same time protecting ourselves in case this thing just decides to turn back around, because you never know. Okay, next up is Canada. What's going on here? Oh, well, let's see. So we marked out our this much below equals this much over, and we're kind of wicking through that now. That's a pretty big bar, but not unreasonable. This moving average has turned around. It's a good thing it could be done going down. I'm not sure exactly what I would want to do with this, because now it's looking like, we took this out, we took this coil out. These swings are pretty crunchy looking. In fact, they're not hardly even swings. If you really look at this, this is just really one big coil, right? And that's not a good place to hide stops under, because there's not enough agreement. And by that I mean anybody that's big enough, or anything that would equal a big trader, in other words, enough little guys coming together to say, yeah, this is where we'd want to sell, isn't going to do it on the top of this coil. Sometimes they're big Fibonacci guys, and we'll look at that. The 382 is getting messed with, and maybe they'll mess with this 618 up here. But this is a real V-type formation. What would I want to see if I wanted to sell? Well, let me come back to that. First, why don't we want to put a stop over this formation? Because there's no limit orders. Nobody wants to sell there. That would prevent price from getting up there. The only thing that's going to be there is a bunch of retail stops, little guys like us that are trying to protect profits that have caught this leg down or chased it down and said, well, if it gets back up here, I'm just going to get out. Um, so yeah, if we get past that, it's not something we really want to be using to try and protect ourselves because there's no one there to help us. Our friends are going to be behind great, big, hairy structure, big swings, big Fibonacci. That's where our friends are going to be, not on the other side, little coils like this. We want large traders in there, large banks that are going to look at the market and go, yes, that is a place where I'd be interested in getting involved, and this is not a place where those guys are interested in getting involved. Okay, that being said, it's kind of interesting that we've come right back to the apex of this triangle consolidation thingy. We're right there in the middle of it, which is also the origin of this big thrust. So this is an important level to look at. When we keep a look at that. Actually, let me make a note of that. I like that multiple confluence of things. Excuse me, I'm taking a few notes for just trying to keep all my ideas, consolidated, and so I can. Well, if I got hit by a bus tomorrow, I could something would remain. Okay, so yeah, things like that where we've got this confluence of not only point of ignition, origin of thrust, but also the apex of triangle, a 382. Over under around a median that we think is important. So yeah, there's a lot of things coming in there. Just 1 second, let me finish my note. Confluence not just for Fibonacci. Well, I'm using the term confluence. Jordan aptly used that for his confluence between Fibonacci levels. I think it applies not just to Fibonacci, but any point in trading or in looking at a chart where you can see this, and that, and the other thing coming in. Moving averages, big ones that lots of traders are going to look at. Big hairy structure, points of ignition, thrust, middle of consolidation patterns, edges of consolidation patterns, things like that, big multi-pivot lines, obvious things on the chart that are going to get lots of traders' attention for different various reasons. It brings them all together, and they may not be aware of the different pieces that are there. They just know their one piece, their favorite trade is there, and they're going to take that every time. There's some guys that sell a 382 every time. There's some guys that sell downsloping 20 EMA every time. If they do it with good money management, they'll make money. But if we can identify the points that have confluence, we can know which ones are the good trades and which ones are not. Which ones have the higher percentage chance of turning into a winner. And not only that, if one of our heavy confluence areas gets busted, if one of our heavy confluence areas gets busted, then we get a neat opportunity to realize, hey, there were a lot of people that thought their direction was correct. They took a trade that way, and it didn't work at all. So if it comes back to that area, expect them to be closing out their positions, and that's going to really be a large case for a trade in the opposite direction of what we originally thought, because we had so much confluence coming in one area, and that all failed, trapping traders on the wrong side of the market. Trapped traders equals market movement. If we get trapped traders, the market's gonna be rocking in the direction of them closing out their trades. In other words, if they're trapped shorts, we're going to see lots of longs. If they're trapped longs, we're going to see if they're trapped shorts, we're going to see higher prices. If they're trapped longs, we're going to see lower prices. So back to this chart. What would I want to see if I want to sell? Well, I want to see weakness. I want to see this work, and I want to see this come down and then come back up again. I want to build a nice stop. I want to see it come down, show some weakness. We get in here, we'd sell over this poke. Why would that be okay to sell over this time and not right now? Well, you could if you really like this area. What it would mean was that there were enough traders or enough size in this market selling at this point to drive the market down in spite of this sudden leg up. And we expect them to not get everything that they want here, especially if there's somebody big that wants to put on a position in Canada at this area. You know, maybe this is the first time we've really seen a swing low taken out. So selling this 382 and selling this 618, there's going to be some traders that just take those trades all the time, and some of them are pretty big. So we want to see this work before we go diving in. And then we'd have a nice small stop, an area of very defined risk. We risk about 40 pips or so, and we'd take it down to the other lower median line parallel, since we like the way this median line seems to be working. Plus, it happens to come in with a lot of upsloping frequency, testing the upsides of this range, this coil. Yeah, I think that's a really good area to take a profit if that worked out. That would definitely be a nice longer 4-hour trade, similar to the way our yen is going to work out, hopefully. Okay, next. Actually, 1 second, I'm going to take a note that I just thought of. Talking about our trapped traders. All right. Now let's see. Yeah, Aussies getting sloppy. That's okay. That's actually kind of what I want to see. The only thing I'm not happy about is it means I can't really trade it in, or if I do trade in it right now, I've got to be looking for, my 40-50 pips and out type of trade. So as this thing gets messier, where do I want to trade? Here against these guys. This is short. Looking for some another leg down into this area here where we're thinking about a longer term buy. Again, why are we looking at that longer term buy? Because we've got this great big uptrend that we think will make it up to this median, and at some point we'll probably retrace to test the other side of this 1-to-1 since it held so well, held well, slopped through, busted through. We generally get a switch back from there. Plus this moving average is coming up. And it's been cupping price very well. So we've got a lot of reasons to think this leg's not done yet, and it's just taking a little break. So if there's a trade here, I really want it up in here with this tight stop so that I could think about taking it all the way down here-ish before we start running into that our daily profit, our daily ideas for getting long. If we had that and we came all the way here, the larger ABC would be all the way right down in our area, giving us a nice one-to-one confluence in addition to the larger daily context. So that would be really great. So we just get to sit around and wait, and maybe I'll clean this chart up a bit. But so far the frequencies still seem to be working. I mean, we've got slop over it here, slop under it here. If it keeps slopping around like that, sometimes you just need to drag your frequency lines around just a little bit to make them match up again. It's a little fine touch thing that you just have to watch and decide. And as you trade more and look at things more, then you'll get better at doing things like that if you end up trading using frequency lines. Okay, so that's Aussie. How about our Euro odd? Yeah, well, right there to our center, it didn't give us the test and retest we wanted. It stopped right on the line, and then came back in. If you'd gotten all excited, you might have sold in the middle of this bar, and then got scared when it came back over. Nothing real. It didn't really get clean. There's nothing wrong with it selling the line per se, because it has been tested fairly well with these touches up here, and as we were dragging the channel down through here, it worked well. Just so long as you were comfortable risking between 48 and 48.50, which is 50 pips, to get down here to about 46.70, which would be like 130 pips. So not the greatest risk reward, still over 2 to 1. But doing it this way, we might get a nice second chance at it with another test and retest. If we came back here, we've got some nice confirmation that this is weak still, and so we ought to get some help with sellers if we got back into this area. In fact, looking at this gap here and this poke low, we might even do something like this. This comes into the gap and kind of turns into a multi-pivot line-ish thing over here. Yeah, right in there, anywhere, somewhere would be nice. We could risk probably again just about having to risk 50 to make something like 140, 150, getting close to 3 to 1, depending on how far along we try to walk this thing down. When you could go for a more extreme profit target if you wanted to use instead of having this instead of using this nearby median, you could take this thing all the way up to the top if you wanted to. See if you get any touches on the handle, and we do. Touches there, kind of slops around it here, and that might give you a little bit more aggressive profit target. Actually, it's really pretty much the same thing. Let me stick with that one. The problem with trying to go down here is, well, if this thing really is slowing down and losing momentum, then we could miss our chance to get out with a nice tidy profit. And I've been pretty bad about that in the past sometimes, where you're just like, oh, well, this thing is rocking. Let's go down here, or do something like this, connect these bottoms and go way down there, and that's fine if that market's really steamrolling. That can be a lot of extra money. That's another extra 100 pips, but you're going to miss that profit target and get stopped out of on a profit stop more often if you do that. And that kind of keeps you locked into a trade, wears on you a little bit more. It feels a lot better to get out on a limit order at your target, even if it just runs right through it. If you have a problem with looking at a market and then it just blasts through your profit order and you're like, oh no, I could have gotten so much extra. You stop and think about it. Well, none of us are Nostradamus, right? We can't make these awesome predictions. We can know where the odds are of things possibly reversing. And when the odds of the trade continuing in our favor start to get low, then that's where we want to start thinking about taking our money off the table, because take it then rather than let it retrace back into your face once you've got a nice open profit. Otherwise, you're going to have to live with the other side of that coin. Is okay. Well, you're going to catch those bigger moves that would have zoomed through your nearby profit target, and then just kept going. You're going to have to deal with the other side of the coin, which is, oh, wow, it touched that perfect profit target. That was great. I should have had my order sitting there just to get out, and then I had to watch it retrace in my face for half a day. And then I got out with less money, and you don't feel good about that either. So choose your poison, and it's really kind of up to you what matches your personality more. If you can handle one side of that better than the other, if you can handle the thing retracing so that you can catch that larger move because that fits your personality, then go ahead. I don't like watching that thing come back in my face after I've had nice open profits. I'd rather go, oh, wow, look at that, that's a really nice run. But I got my money, I'm done. Now I think I'll go play with the kids, or now it's late at night, I'll play some video games or watch a movie. Rather do that than sit there and get stuck in a trade. And torture myself, because I'll end up staring at it while it's coming back in my face, and yuck. So that's sort of a thing that's up to you, but that's how I think about it. Okay, stock market indices are really doing pretty well. Well, we hit this 1-to-1, and rather than cratering off of it, we're getting those nice upward movement. Still wondering about our expanding pivot, but these things fail. Everything breaks. This is nasty looking. But if we don't go any lower than this, when we rock and make a new high, then maybe it's still expanding pivot mode. Maybe we're still going straight up. Maybe we just needed to wash enough guys out of the market so this bull market can continue. You have to see. However, volatility really has picked up. Volatility has been much more wild since the beginning of the year, and even if you draw this backwards even more, you've got even more of a kind of ugly looking, larger expanding pivot type formation. That really makes me wonder what's up. Certainly not gonna. You have stock positions and you want to let them ride. That's up to you, but I don't want to chase this thing any higher than it is. We'll see how far it goes. Not a big stock guy right now anyways. I prefer to get my ins and outs with the currencies. I get less tangled up into it. I can just, think about my charts and not worry about U.S. economy or quantitative easing so much, and just follow what's going on. Okay, so I drew, we had been looking at this. Caught all these touches here. Gapped after resisting on this line, gapped through this line. You can call this a Fibonacci switch back easily. They sold it. They didn't get filled. They sold it again at the close or near the close. It came back and then closed right back there. Now it gaps up today. You can definitely expect that the 382 guys that were early front running this thing, we're going to be there buying. because they didn't get none. They have to protect themselves. So up we come. We'll find some sellers here. We'll see how well they do. That's the way you need to think about Fibonacci. Let's find some sellers, let's find some buyers, and see how well they do. Do they influence the market or not? If they don't, well, we don't want to look at that Fibonacci number. If they do, we want to sit up and pay attention. Well, I'll take that back. If they don't influence the market and it was a large Fibonacci number, something that everybody's going to draw on their chart, and it just zooms right through it, then like this. This is just because there's a gap didn't mean it didn't apply. This is price is zooming through the Fibonacci number and then coming back to retest it. So they're always worth looking at. They give us a good idea of direction. So this kind of action really makes me wonder. We're definitely going to get up here and test this. There's no way we're not going to get to this 618. Is there a trade? Well, not one that I want to take, because where's your stop? Your stop's going to be under here, and we're already way up here. And if we do retrace, then this is a bunch of trapped guys that they got all excited about getting short, and they're ready for it to roll over now. One thing about stock market transitions is they usually are definitely not sudden meltdown affairs like 1987. There's usually a lot of topping put in. Much more like 07. Alright. Here's the tick chart of the ES. This median line is working very well. Showed us the extreme on one side. Showed us a nice zoom and retest here. Touches on the handle, so we know the frequency is valid. Definitely going to keep that one on the chart. This downsloping frequency may still be going as well. Let's add a few more lines and see what happens. Uh, 200 to 250. Yeah. Let's put the next one in. So this is showing us the bumps in the road. Bump in the road. We thought about shorting this yesterday, but we had this big run up, and it was towards the end of the day, and we didn't want to use this as a stop. There just was all kinds of reasons not to take that trade short. Even if you had thought that this thing was going to roll back down again, and I kind of did. Then we get to the next line, just giving us a little bit of wall that we got to chip through, and then we bust through it. It should be interesting to see what happens when we get to this next one. Probably the same thing. Maybe another little work down, come back up to the next one or so, and then maybe we have some troubles because we actually have a fairly well-defined swing here. We'll see what happens with that. If we take this out, then the highs are coming back into play again, and new highs are definitely possible. Well, new highs are definitely possible right now, but we'll know more after we see this taken out. Anything we didn't talk about? It was running on 30 minutes, and that's probably about as long as a recording as I want to do, and I talked about some interesting things, so I think I'll shut it down here for this morning. We'll come back probably towards the close, see what happened, and talk about maybe just do a little quick update. Alright, thanks for watching.